The following script was written, verified, and approved by compliance professionals at financial regulation courses. This is a high-accuracy breakdown of a regulatory topic. A member firm is any broker-dealer admitted to membership in the Financial Industry Regulatory Authority pursuant to FINRA's bylaws and FINRA Rule 1013. The obligation to become a member flows from Section 15(b)(8) of the Securities Exchange Act of 1934, requiring association membership for SEC-registered broker-dealers. Following 2023 amendments to SEC Rule 15b9-1, the proprietary trading exemption was narrowed, meaning virtually every SEC-registered broker-dealer is now required to be a FINRA member. Admission to FINRA membership is not automatic. Applicants must complete the new member application process governed by Rule 1013 and administered by the MAP Group. The NMA requires a detailed business plan, a description of the firm's supervisory system compliant with Rule 3110, and full ownership disclosure. Associated persons must submit Form U-4, disclosing 10 years of employment history and detailed responses regarding criminal, regulatory, and financial matters. The application must also detail communication systems, business continuity plans, and system redundancy arrangements to ensure operational resilience in the market. The NMA process typically spans 6 to 9 months, though complex business models or prior disciplinary histories can extend this timeline significantly. At the end of 2022, FINRA's oversight extended to 3,378 registered firms and over 620,000 registered representatives. Under Rule 3110, every member firm must maintain a supervisory system reasonably designed to achieve compliance with applicable securities laws and regulations. The firm's president bears ultimate responsibility for compliance, ensuring that all functions are delegated through documented authority and properly registered principals. WSPS must identify every required procedure, the responsible supervisor, and the frequency of review, providing clear evidence of ongoing regulatory compliance. Operational integrity is further protected by SEC Rule 15C3-1, which requires firms to maintain minimum net capital to protect customers and creditors. Statutory minimums range from $5,000 for limited activity to over $1 million for firms carrying customer accounts or underwriting. Under the aggregate indebtedness method, a firm's total liabilities may not exceed 15 times its net capital, maintaining a strictly regulated leverage ratio. Large broker-dealers may use the alternative method, maintaining net capital at the greater of $250,000 or 2% of aggregate debits. SEC Rule 17. A-11, the early warning rule, requires notification to regulators if net capital falls below 120% of the required minimum. Should a firm's net capital drop below the absolute minimum, it must immediately cease conducting securities business until compliance is restored. Complementing capital rules, SEC Rule 15C3-3 requires firms to keep customer assets separate from firm assets in a special reserve bank account. FINRA examines firms on a periodic cycle determined by risk profile. These audits verify compliance across books, records, and communications. Examinations focus on AML compliance under Rule 3310 and the retention of books and records as mandated by SEC Rule 17A-4. Rule 2040 prohibits member firms from paying transaction-based compensation to any unregistered person required to be registered as a broker-dealer. All associated persons must be properly registered, having passed the Securities Industry Essentials exam and relevant series examinations like the 7 or 24. FINRA's enforcement authority includes fines, suspensions, and expulsion from membership to ensure market integrity and professional standards are upheld. Member firms also carry strict trade reporting obligations using systems like Trace for corporate and treasury bonds and trade reporting facilities for equities. For exam preparation, remember that a member firm is the foundational unit of FINRA regulation, tied directly to the Securities Exchange Act of 1934. Success in this role requires rigorous supervision, strict financial responsibility through net capital maintenance, and continuous professional registration of all staff. Visit financialregulationcourses.com to access one of the industry's fastest-growing free finance dictionaries, expert career resources, and innovative professional memberships. Learn how our verified professional profiles and QR code resumes are helping finance professionals present themselves with greater credibility throughout the hiring process.